Friday, May 16th, 2025. And welcome, everyone. Today's a bit special for us.
Oh,
Yeah, it's actually our 40th episode of Finwell Daily Brief.
40. Wow, that's quite a milestone. Congratulations.
Thank you. And thanks to all of you listening. 40 times we've gotten together to unpack the day's finance news. Feels great to be here with you.
It really does. 40 shows. It underscores how important it is to stay on top of things in the financial world. It's been, well, quite the journey navigating these markets with you all.
Absolutely. And speaking of interesting things, let's kick off this 40th episode with a really fascinating financial fact we came across.
Okay, let's hear it.
Right. So get this. Roughly 30% of Indian retail investors who are under 30, the younger generation, they have been putting significantly more money into ESG funds, environmental, social, and governance.
Right, the sustainable investing trend.
Exactly. And the amount. In 2024 alone, inflows hit 12,000 crore.
12,000 crore. That's a huge number.
Isn't it? It really shows a growing awareness, especially among younger folks. They're not just looking at returns, but also, the impact, sustainability, social factors.
The major shift. It suggests they're taking a more holistic view, thinking about purpose, not just profit. And that kind of inflow, well, it shows the ESG market itself is really maturing here in India.
Definitely maturing. Okay, let's get down to the numbers. The market summary from today's close, 3:30 p.m. IST.
How did we end the week?
Well, it was a bit of a mixed bag, you could say. The Nifty 50, our main index, closed at 25,019.80. That's down slightly, 42.3 points or 0.17%, so a small dip there.
Okay, a little bit of consolidation perhaps?
Maybe.
Yeah.
But then you look at the broader market. Nifty Midcap 150, really strong performance, closed at 20,960.5. That's up 179 points, 0.86%.
0.86? That's quite healthy.
It is, and the small caps, even better. The Nifty Small Cap 250 finished at 16,405.70. That's a jump of 246.45 points, or a really impressive 1.53% gain.
Wow, 1.5%. So quite a divergence between the large caps and the rest.
Exactly. Big difference.
That often suggests, while the big players maybe took a breather, there's still strong confidence underneath, especially in domestic growth stories, maybe. Investors looking for growth in those mid and small segments.
That makes sense. And the overall picture, the Nifty Total Market Index gives us a sense. It closed at 12,858.50, up 48.10 points, so about 0.38% up overall.
Okay, so positive overall, driven by the broader market.
Right. Now, shifting gears to bonds, the 10-year Indian bond yield actually eased a bit, down to 6.300%, just a tiny drop, 0.5 basis points.
Interesting. Any particular reason?
Yeah, it seems the Reserve Bank of India, the RBI, has been active buying bonds. That tends to push yields down.
Right, they're open market operations. It helps manage liquidity, keeps borrowing costs from rising too fast. It's a key tool for them.
Absolutely, and that affects everything, right? Bank costs, potentially even loan rates eventually.
Precisely, it ripples through the system. Okay,
and lastly, the currency. The rupee versus the US dollar. Held pretty steady, closed at 85.60 INR per USD.
Stable there.
Yeah, seems like we've got foreign investment flows coming in, but also the dollar is strong globally, so maybe those two factors are kind of balancing each other out right now.
Makes sense. Stability in the exchange rate is generally good for businesses, especially importers and exporters. Avoids unwelcome surprises.
Definitely. Okay, so that's the snapshot. Now, what about the news-making headlines today in India?
Anything particularly jumping out?
Well, obviously that mixed market performance we just talked about. Nifty down, mid-small caps up, that's key. But a couple of other things caught my eye. There's talk about India reportedly boycotting Turkey's film industry.
Oh, really? That's interesting geopolitically.
Yeah, and also Delhi Airport apparently ended its ties with a ground handling company called Celebi. Now, these might sound specific, but you have to think, could there be knock-on effects? For aviation stocks, entertainment companies.
That's a very good point. These seemingly non-financial events can definitely impact specific sectors or companies. Investor sentiment can shift quickly based on things like this. Shows how interconnected everything is.
Totally. Okay, let's dig deeper into the main financial and economic news. That mid-cap and small-cap strength up 0.86% and 1.53%. What was behind that surge?
Good question. Any specific sectors leading the charge?
Yes. Sources point to consumer goods and renewable energy.
Okay. Consumer goods suggests strong domestic demand is holding up, which is always a good sign for the Indian economy.
Right. People are still buying things. And renewables. Well, that push towards green energy just keeps getting stronger, doesn't it? Government initiatives, investor interest.
Absolutely. Renewables are a major theme.
Hmm.
It reflects policy support, but also just the economics are getting better and better for clean energy. It's a huge potential growth area.
Definitely. And that RBI bond buying we mentioned, let's circle back to that. So they're buying bonds, keeping yields like the 10-year at 6.3%. How does that actually, help the average person or business?
Well, it's about borrowing costs. When the RBI buys bonds, it injects liquidity and keeps government bond yields lower. Lower government bond yields tend to act as a benchmark, so it can lead to lower borrowing costs for banks.
Ah, okay, so banks can borrow cheaper.
Exactly. And if their funding cost is lower, they might pass that on in the form of slightly lower interest rates on loans. Think business loans, maybe even home loans eventually. It helps stimulate sectors like banking itself and also real estate, which is very sensitive to interest rates.
Got it. So it's sort of greasing the wheels of the economy.
That's a good way to put it. It supports credit flow.
Oh, now here's something a bit different. News that India and Pakistan have agreed to keep talking about the ceasefire along the border.
Confidence-building measures. That's usually seen as positive, reducing tensions.
Right. And interestingly, this seems to have actually given a little boost to defense stocks today.
That is interesting. You might think the opposite. But perhaps the market sees it as a sign of maybe greater stability, allowing for more planned procurement, or just relief that tensions aren't escalating. Markets react in complex ways sometimes.
They certainly do. And speaking of reactions, let's talk gold. Prices edged up a bit today, about 0.5%, to around 93,250 per 10 grams.
Okay. Gold moving up. Any specific driver?
Well, what's interesting is that some technical charts might suggest gold is due for a pullback, but it's still climbed. It seems like good old global uncertainty, economic jitters, geopolitics, you name it, is still pushing investors towards gold as a, safe haven.
That's its classic role, isn't it? When things feel uncertain elsewhere, gold tends to attract buyers looking to hedge against risk, regardless of what the short-term charts say.
Seems like it. And one more positive piece of news. Apple. They've apparently reaffirmed their commitment to expanding manufacturing here in India.
That's significant. Continued investment from a giant like Apple.
Yeah. It's a big thumbs up for India's manufacturing sector, right? And the whole Make in India push. It probably boosts confidence across the electronics supply chain here.
No doubt. It creates jobs, builds expertise, and importantly, it signals to other global companies that India is a serious manufacturing hub that can attract even more investment down the road.
Absolutely. Okay, so we've looked at the market moves, the news. Let's try to bring it all together. What's the outlook? What should we be thinking about?
Right. Summarizing the day, we had that split market. Nifty slightly down, mid-small caps flying high, driven by consumers and renewables.
And the RBI is keeping yields relatively low, rupee stable, inflation seems under control for now.
Which keeps the door open for potential rate cuts later, maybe.
Mm-hmm.
That's supportive for banks, realty.
And we saw that defense stock reaction, the positive Apple news. So putting it all together, what kind of investment themes emerge?
Well, a few things stand out. The potential for rate cuts definitely puts banking and real estate in focus. Renewables, clearly, with that strong government push and inherent growth. Defense remains relevant given the geopolitical landscape. And gold, as ever, as that hedge against uncertainty.
Makes sense. But there are always risks, right? What should we be wary of?
Definitely. Two main things to watch, I'd say. One is rising crude oil prices. That can feed into inflation and hurt company profits.
Yeah, oil is always a big one for India.
And the other is foreign institutional investor flows. We've seen some outflows recently. If that continues, it can put pressure on the market.
Right, FII outflows. Need to keep an eye on that. So given these themes and risks, any thoughts on, say, asset allocation? How might someone structure their investments?
Well, obviously, it depends hugely on individual risk tolerance and goals, but based on today's environment, a possible approach suggested by some analysis is maybe 60% in large caps for stability.
Okay, the big steady companies.
Right. Then perhaps 30% in mid and small caps to capture that growth potential we saw today.
Makes sense given their performance.
And then maybe the remaining 10% allocated to debt instruments and gold for diversification and that safety cushion.
So 60-30-10. Large, mid-small debt gold, kind of balancing growth and safety.
Exactly. It's about finding that balance. But again, everyone needs to tailor it to their own situation.
Crucial point. And looking ahead, what are the key events or developments we should be monitoring?
I'd say two main things in the near term. First, the RBI's next policy meeting in June. That will give us vital clues about their thinking on inflation and rates.
Right. The June policy meeting, very important.
And second, internationally, keep an eye on any developments in the U.S.-China trade talks. Those discussions always have the potential to impact global markets significantly.
Good points. RBI policy and U.S.-China trade. Got it. Okay, now, before we move on, I just want to take a moment.
Sure.
If you're listening and finding these daily updates helpful, and we sincerely hope you are, especially as we hit our 40th episode milestone, could we ask a small favor?
Go ahead.
Please think about subscribing to Finwell Daily Brief. Our whole aim is to cut through the noise, give you the key financial insights you need, clearly and hopefully engagingly. We want to make staying informed easy, not overwhelming.
It's about empowering you with knowledge for better financial decisions.
Exactly. And hey, if you want to chat more, share your thoughts, or ask questions, please connect with us. Find SOS Finwell on LinkedIn. We genuinely love to hear from you and build that community.
Definitely. We value the interaction. Staying informed is key, and subscribing helps you do that effortlessly.
Okay, let's wrap up today's key takeaways then. Our 40th episode saw, well, a bit of a split market, Nifty down a touch, but mid and small caps really shone thanks to consumer spending and that green energy push.
And the RBI's influence is clear, keeping yields in check, which is good news for banks and realty, especially with inflation behaving for now.
Right. Opportunities in renewables and defense were highlighted, but we also flagged risks like rising oil and those FII outflows.
And we talked about that potential 60-30-10 diversification strategy, large caps, mid-small caps, debt gold, as one way to think about balancing risk and reward.
A balanced approach, always wise. And on that note, we'd like to leave you with a thought from the ancient Greek philosopher Plato.
Oh, a classic.
Indeed. He said, "The greatest wealth is to live content with little."
Powerful words. Makes you think, doesn't it? Beyond just the market numbers.
It does. While we focus on building financial security, maybe true wealth also lies in finding that contentment, that balance, irrespective of how much we have. Something to ponder.
Valuable perspective in today's world.
So please don't forget to subscribe to Finwell Daily Brief for your daily financial download, and do connect with SOS Finwell on LinkedIn. We really appreciate you tuning in, especially today for our 40th.
Thanks, everyone.
Have a wonderful Friday, enjoy your weekend, and we'll be back with you again soon.